Good evening, students. How are you guys? So, students, we are into the second session of chapter 5, that is audit of items of financial statements. And day before yesterday, we had learned the sources from which chapter 5 is drawn. So, I had told you that this chapter 5 is based upon provisions of Companies Act, specific requirements of Schedule 3 to Companies Act 2013, requirements of accounting standards, and auditing procedures. So this chapter is a combination, is an amalgamation of all these sources, of all these things. So we had tried to understood basic format of presentation of financial statements of companies as provided in Schedule 3 to Companies Act. And I had told you that it is better if you go through first, you go through the requirements of Schedule 3. This would not only help you your accountancy, but here in this chapter in auditing also. And we had studied audit procedures relating to inventories, relating to trade receivables. So today, students, we shall be taking up matters relating to property, plant and equipment with specific focus to financial statements of a company. Although the audit procedures which we are going to discuss today, these are applicable to any entity, but we shall study them with specific focus, with specific reference to companies. Okay, what are the disclosure requirements in respect of PPE in relation to Schedule 3, all these things. So guys, as I was just telling you that this chapter is partly drawn from requirements of accounting standards. So tell me, which accounting standard deals with property, plant and equipment? Yes. Give your responses on mail, on BOS mail. Yes, all of you are correct. Tejaswin, Pallavi, AS10. So can anybody tell me, students, what is the fundamental criteria for recognition of an item as PPE under AS10? I think you have already done AS10 in your accounts classes. Yes, anyone who can tell me what is the fundamental criteria for recognition of an item as PPE under AS10? Yes, B. Kiran Kumar, future economic benefits from the asset. Yes, you are right. And yes, Apurva Das, you have written correctly and completely. Benefits flow to the enterprise, future benefits flow, and costs can be measured reliably. So AS10 states that an item shall be recognized as PPE if future economic benefits are expected to flow from this item, and the cost can be measured reliably. It is necessary that cost should be measured reliably. This is also an important point. So we have not to forget this. So obviously, you know, in accountancy generally that that such expenditures which have a value in coming years, for which benefits are expected to flow in coming years, they are capitalized in the books of accounts. They are not charged to the statement of profit and loss. So the fundamental concept remains the same. The only thing is, in accounting standard, it is written in accounting and technical language, which you have to remember. Okay, like we know that buildings are capitalized. We know that vehicles are capitalized. We also know that plant and machinery is capitalized. Lands are capitalized. Office equipment is capitalized. Okay. So what is included in cost? So we have just learned that cost can be measured reliably. So what is included in costs? Yes. Anyone? Anyone who remembers AS10? Yes, guys, simultaneously you are also getting refreshed up regarding your accountancy topics. And Kiran Kumar ji, you are giving both groups. So it is definitely going to help you. Yes, okay, Palvi, that is okay. Initial and subsequent cost. All the direct, yes, Tejaswin, all the direct expenses attributable to the asset. Like suppose we try to understand this concept in a basic layman's language, in basic layman's manner. First of all, like suppose you incur some expenditure on purchasing some machinery. So the basic cost of machinery is going to be capitalized. It would form part of your PPE. It would form part of property, plant and equipment. And now I would say, so tell me, if you purchase a machinery of say 5 lakhs, and the machinery carries a GST rate of 18%. Okay, so in the bill, the total cost comes to 5.90 lakhs. You also want to claim ITC on this GST which you have paid. Okay, so what would be the amount which is going to be capitalized? Yes, anyone? Yes, Apurva, that's right. 5 lakh is recorded. Yes, all of you are writing correctly. Okay, so we would be capitalizing the basic cost, because we are claiming ITC on GST paid. Okay, and suppose in this example the cost of machinery is say 5 lakhs, and I have imported this machinery, and at the customs I have paid custom duty of rupees 90,000. Okay. Then tell me what would happen. Which amount would be capitalized? Yes, right, Tejaswin. 5,90,000. Yes, Pallavi, you are also right. Okay. And again, assume that in this 5,90,000, at when machinery is imported, GST is also charged at the rate of 18%. Okay. So obviously the company would be claiming input on GST amount. So this would not be capitalized. Okay, 5,90,000 would be capitalized. Yes, Ritika, you are right. Custom duty is non-refundable. It goes to form the part of the cost of the asset. And suppose you have imported a machinery and the machinery has arrived at, say, Nhava Sheva port in Mumbai. Okay. And the company's plant is in, say, somewhere in Uttar Pradesh, in UP. So the company has paid freight from Nhava Sheva to to its place of business in UP. Okay. So say the freight paid is around 50,000. Then would it be treated as an expense or the amount would be capitalized? Yes, Palvi, if anything is refundable, you have to remember the concept. If anything is refundable, then it is not going to form part of the cost. Yes. So freight, it would be capitalized. Say that now the machinery has come to your place of business in UP, and now the company has incurred some costs. It has paid. It has incurred some expenditure on installation of machinery. Okay, say 1-2 lakh rupees have been incurred. So would these form part of the cost of machinery? Basic fundamental accounting concepts. I think you should be very familiar with these. But anyway, these are in your syllabus. And sometimes simple questions also come in the exams. And sometimes it so happens that even you are amazed whether such a question can come. And some people give wrong answer that such a simple question can't come. Yes, yes. Capitalize the installation charges. Yes, Tejaswin, right. So these are part of the machinery. These are part of the machinery cost. So remember these twin criteria which are there in AS10. Always remember these twin criteria. These are going to help you in exams, and do not forget second part. Okay, this should always be in your mind. Keep it repeating in your minds that which are the twin criteria for recognition of an item as PPE. Such type of question in part has come many times in auditing paper. Okay. So these costs include costs incurred initially to acquire or construct an item of property, plant and equipment. Okay, like purchase cost, acquisition cost in our example which we were discussing, or to construct an item of property, plant or equipment. It may so happen that that the entity or the company is fabricating the machinery itself from its own sources. It can so happen. Okay, or say the entity or the company is constructing building, so that is also form of is also part of property, plant and equipment. So this is the initial cost. And second part, which is also very important, subsequently to add to replace part of or service it. Okay, so like when machinery is some property, plant and equipment, or machinery you can say, which is part of PPE, is put to use, is put to active use, then obviously some expenditure is going to be incurred. So whether it needs to be treated as an item of PPE or whether it would be charged to statement of profit and loss, it would depend upon circumstances and depending upon the twin recognition criteria of PPE under AS10. Okay, if like some expenditure is incurred on a machinery, some capacity is increased, from which the economic benefits are expected to flow to the enterprise in coming years. So obviously the amount would be capitalized. Or if there are some routine expenditure incurred for running the machinery, like routine breakage, routine replacement of parts, like say the company has some textile machinery, then it is very common that some parts like needles, etc., these are going to be replaced every after every few days or months. Okay, so these would form part of repair and maintenance expenses and would be charged to statement of profit and loss and won't be capitalized. Clear, guys? So an item of PPE that qualifies for recognition as an asset should be measured at its cost. So elements of cost. Yes, Tejaswin, you are also giving correct example. Elements of cost. The cost of item of PPE comprises all these three factors which we have discussed. So sometimes this very question has also come in the exam, framed in different ways, that what are the elements of cost. So you won't be straight away asked, like some situation would be given to you, and from there you would have to analyze that this particular answer is to be written. Okay, so a little bit analysis is always required in CA papers. Okay, they try to build you to test your analytical skills. So very straightforward, like what are the elements of cost under AS10, such type of questions may not be asked. There are little chances of direct questions being asked. Okay, few questions are also asked direct, but generally 60-70% things are based upon a situation based, and they are asking you to analyze a situation and write the answer. Okay, so purchase price including import duties and non-refundable taxes after deducting trade discounts and rebates. any cost directly attributable to bringing the asset to the location, like freight, we have discussed. Initial estimate of the cost of dismantling, say site has to be prepared, some item is installed, that has to be removed. Okay, decommissioning. So these are all necessary for that item to be installed. So these are going to be capitalized. So AS10 also gives examples of this whole material. Student says ad verbatim as it is from AS10. It is as it is from AS10. Nothing has been added. Okay, if you see your uh, accountancy module AS10, you would find all this material as it is, even not one word is changed. Okay, so yes, Bhavna, dismantling means removing some items, like I dismantle certain machinery because I want to modify it, I want to recondition it, I uh, um, separate its parts, dismantling something. Okay, so examples of directly attributable costs are cost of employee benefits, like the example of wages we have considered. Cost of site preparation, obviously, suppose if the machinery is to be installed at a site where some civil works are necessary, say a heavy foundation is going to be built on which machineries would be installed, a platform is required. Okay, so this would also be part of the directly attributable costs. Yes, decommissioning, Aisha, is also used in the same sense as dismantling. Like something has already been commissioned, it is already in working, and now you are going to dismantle it. So all the costs associated with it. Okay. Initial delivery and handling costs. So same things, installation costs, cost of testing whether the asset is functioning properly after deducting the net proceeds from selling any items. So when you test an item, an item of say PPE, say machinery item, then since you have not started the commercial production, so therefore it is going to be capitalized. It forms part of the directly attributable cost. Clear, guys? And professional fees, like fees paid to some engineer, fees paid to some architect. Say, like a company is constructing a building, say in an area of 2 lakh square feet. So the architect, the company has paid fees to the architect of say rupees 5 lakhs. So these are professional charges. These won't be charged to revenue account. These won't be charged to statement of profit and loss because these are incurred for the capital asset. Yes, Pallavi, say accounting standards have their own benchmarks. Okay, so you have to see what is written in the accounting standards. So the terminology which is used in accounting standards, if you read them carefully, it is all inclusive. It is going to cover what you are writing. So examples of costs that are not costs of an item of PPE, okay, like advertising costs, cost of administration costs, inauguration costs. So these are specific costs which have been stated in AS10, which are not costs of an item of PPE. So this is the basic overview of AS10, which you have to always keep in mind. So a question can crop up in your exams, which could be a combination of these fundamental aspects of PP10, oh sorry, AS10 and audit procedures. It can be there. So for this chapter, students, again, you don't have to remember each and every requirement of AS10 as you have done in accountancy, but you have to remember the basic overview, the fundamental principle which is there in AS10. So that much is sufficient, and that much is given in your module. Clear, guys? So now we come to the auditing part. This is what we were discussing about accounting standard AS10. Now we come to the auditing part. Now tell me, students, what is PPE in context of assertions? What is PPE in context of assertions? Yes, anyone? Yes, Dilip, Tejaswin. Yes, you are right. You are writing it is account balance. So since it is an account balance, like trade receivable is an account balance, like inventories, like like trade payables, like cash and cash equivalents. So on the similar footing, PPE is also an account balance. Okay. So all the assertions which relate to account balances apply to PPE, like existence, like completeness, like valuation, okay, like presentation and disclosure, okay. So existence. So tell me, first of all, we shall deal with the existence assertion of PPE. So tell me how you would verify as an auditor existence assertion uh, of PPE amount which is appearing in the financial statements of a company. Yes, from your own common sense. Now we all now know the meaning of assertions. We have discussed it many times. Now apply your mind and try to think logically. Yes. How you as an auditor would verify the existence assertion of a PPE item? Yes, yes. Correct. Physical verification of assets. Yes, Tambeshwari, physical verification of assets. Now, tell me whose responsibility is it to physically verify the assets? Physically verify PPE items? Again, and now students, I have told this concept you many times. Since we started these classes, I have told you this thing many times. Yes, management. No, Kiran Kumarji, no, not auditor. Always remember that this is the fundamental thing in auditing. Always remember three things. You would never make mistake in answering um, case scenarios, MCQs, and descriptive questions. And this happens in case scenarios. Now, three things I am telling you. Please, my request is to you is keep in mind these things while answering case study based questions. Number one, preparation of financial statements is responsibility of management. Therefore, what does flow from it? Therefore, physical verification of PPE of assets is primary responsibility of management. Number three, physical verification of inventory is also primary responsibility of management. Because if it is not primary responsibility of management, then how can we say that preparation of financial statements is primary responsibility of management? Then that statement would be wrong. It is the primary responsibility of management to see that assets are physically verified, that inventories are physically verified. Auditor comes into picture later on. He evaluates, he assesses whether the management has conducted physical verification, or he at the best can attend physical verification process. But primary responsibility remains that of management. So guys, many of you are still writing it wrongly. Although I had told you many times, and I fear that many of you are going to write it wrongly in the exams also. So try to see the difference. Say the main responsibility, primary responsibility of physical verification of PP items is data management. And if there are some differences, if there are any discrepancies in the PP items when the physical verification has been conducted by the management, it is again the responsibility of management to deal with such discrepancies in books of accounts. The auditor cannot step into the shoes of the management. He is not supposed to write books. Is he supposed to write books? He is not supposed to write entries on behalf of management. Yes. Yes, guys. Is this point clear to you? Okay, fine. So for verifying existence assertion, the auditor would do following things which are there in your module, just like we have studied the similar audit procedures in case of inventories also. In case of inventories also, if you scroll the page back and see the audit procedures relating to inventories for existence assertion, you would find that these are similar. So again, your work is now considerably reduced. You have just to change the word from inventories to PP. That's all. Isn't it so simple? So obviously, I, as an auditor, I would review entity's plan for performing physical verification of PPE, because plan is to be prepared by the entity. I would see whether you have conducted physical verification or not, and what was your report. Okay. Evidence of appropriate supervision of those performing physical verification of PPE should be examined. That those who carried physical verification of PPE items, whether their work was supervised by somebody. Okay. Yes, Tejaswin, such situation can be there in case of PPE also. Say, uh, say if you have sent some machinery to a repairer for carrying out some repair work, it can't be repaired at your site. It is quite possible. Okay. So obtain PPE physical verification report backed by the working sheets. Again, the same point, same things. So again, all the points are continuation, are similar to what you have read about inventories. See if the PP items are properly tagged. Like say Kiran Kumarji, you would be very familiar with this. Like say banks, in bank branches, for furniture, every table, every chair, every computer, they tag it. They put a number on it, so that it can be easily identified. Okay. And reconciliation of items of PPE as physically verified with the fixed asset register maintained by the entity, and what is appearing as per their records, and verify how the management has treated with those discrepancies based on the physical verification undertaken. Say if some item is not present, whether it has been deleted from from PP schedule. Okay. And what is the procedure adopted for its deletion. Okay. So Kiran Kumarji, you are confirming what I have said. So guys, this is how you have to create a picture in your mind, and you have to relate the things practically, so that you do not forget in the exams. Because when you have so much of material running into, say, an average chapter, say, runs about 70-80 pages, and there are 11 chapters. Okay. So you have to read each and every line. You have to remember many concepts. Okay. So this becomes a in itself a challenging task, but it is not insurmountable if you approach it with required strategy. Then then it becomes very easy. Okay. And now second is completeness assertion. So what was completeness assertion? Yes. Again, guys, tell me what is the meaning of completeness assertion. So we have done it 2-3 times. Rather more, we have done it in chapter 4, we have done it again in chapter 5. Oh, yes, Srinivasan, you are stating what will auditor mention in his report. He has to report it in two contexts. Okay, number one is under Caro reporting, and number two is if the item is of such material amount, it is of such significance that it can impact his opinion, then he has to see to it. Yes, Tambeshwari, nothing is left. Yes. So, and Tambeshwari, this line I am speaking to you, nothing is left. You won't write this line in the exams. Nothing is left. You have to write, you have to frame it in another way. You have to twist it in another way in the language of auditing. This I am speaking just to make you understand the things. Okay. So you have to remember it as that all items which needed to be recorded have been recorded. So you would write it in it this way in the exams. Yes, Tambeshwari, is it clear? Now, this I am saying nothing is left. This is way of this is my way of making you understand something. Yes, Depali, yes. All items supposed to be recorded have been recorded. That is correct. So how you would ensure that? Which procedures you would perform? Now think from very common sense point of view, from a layman's perspective. Think how you would ensure that all items which should be recorded have been recorded. Yes, yes, yes. Right, Tejaswin. Anybody else? So first thing which should come to your mind, you would check PPE schedule. So obviously PPE item is appearing on the face of balance sheet and the details are given in the schedule forming part of the balance sheet, which would show opening balance, additions, deletions, gross block, depreciation, accumulated depreciation, net block. It would show all these figures. Okay. So you would check, first of all, you would check arithmetical accuracy of PPE schedule. Okay. And see that all the balances which are closing balances which are appearing in the financial statements, these tally with the books of accounts. Opening balances also tally. Okay. And if additions, deletions are there, then you would verify that additions pertain to those items which qualify to be classified as a PP item. Again, which meet those twin criteria which we have discussed at the beginning. Okay. Whether some item has been shown as PPE, but it should be charged to the statement of profit and loss account. Okay. And if such amounts are material, then it can impact auditor's opinion also. If some item of say revenue account is charged to capital uh, is capitalized, or some item which is capitalized charged to revenue account, vice versa. So these can impact profit or loss of the entity. So verify that the cost of item of PPE as per AS10 requirement. The basic fundamental remains the same. The only thing is how you are twisting it, how you are twisting these procedures in context of completeness assertions. Now, this is the way how to present your answer in the papers. Yes, Pallavi, it would lead to material misstatement, definitely. So, like items such as spare parts, servicing equipment are recognized in accordance with AS10 when they meet the definition of PP. Otherwise, these items are not classified as PP items. Okay. Test the purchase invoice, verify whether PP additions have been approved by authorized personnel. So all these things. Similarly, in relation to deletions, you have to see the management's procedures, the management's internal control in this regard, purpose of deletion, reason of deletion, okay, and whether the deletion or whether some asset has been sold, whether it has been approved by the competent authority, whether steps which have been prescribed in the internal control manual have been followed or not, all these things, and how these have been how the deletion has been recorded in the books of accounts. Okay, very simple. And now third comes valuation. Now what is included in valuation? Now do not see what is written in the next para in this module. Just again try to think logically. So guys, when I ask you, when I exhort you to think from your mind, I am trying to open up your minds. That is why I insist that first you do not see from your textbook, and just logically think. Yes, Pranav. Anybody else? Yes, PP. See, one of the important aspects of valuation of PP is charging of depreciation. So we all know that as an asset is put to use, its value is diminished due to obsolescence. This we call as depreciation charge. So if depreciation is not charged as an expense to statement of profit and loss, it would not properly show the financial results of the enterprise. It will not properly show the profit or loss of an enterprise. Okay. That is why it is necessary to see that depreciation is applied properly. So the auditor would assess the methods of depreciation charged, whether the same method has been charged on consistently on a year-to-year basis. Okay. Which depreciation method has been charged, straight line method or WDV. So all these things form part of valuation of PPE. Okay. And another important point is impairment loss. Yes, Tejaswin has already written impairment loss, which is there in AS 28. So there is an accounting standard, students, impairment of assets. So the basic fundamental, the basic standing of AS 28 is that asset should not be carried at an amount which is more than its recoverable value. Okay. So if its carrying amount is more than its recoverable value, then it means that asset is impaired and impairment loss is booked in accordance with AS 28. Okay. So then comes rights and obligation. Yes, how you would verify uh, the rights and obligation assertion in relation to PPE? Yes. Now we are talking about rights and obligation assertion. Now in your paper also, in your exam, see minutely, read between the lines, see what the paper is asking from you, what is requirement, whether it is talking about rights and obligation assertion, whether it is talking about valuation assertion, whether it is talking about completeness assertion. So you have to write only relevant points. Say if you in these type of questions, in questions of audit procedures, if um, audit procedures relating to a particular assertions are asked and you write some other procedures which are not relevant to that assertion, you won't be given any credit. Yes, yes, this is the pretty fine, great guys. This is the logical way of thinking. See the item, see the purchase invoice. If it is in the name of entity, it gives a right to the entity to control the asset. The entity becomes the legal owner of that asset. Okay, like say in case of building. So all the bills of construction material, these should be in the name of the company. Okay. In the say, and the payment should have been made by the company. And in the case of machinery item, see the machinery bill, as simple as that. And in case of acquisition of certain land, say some land has been acquired, then see the document which confers title, like conveyance deed, like say sale deed, title deed, these type of documents. Okay. And say if the company tells you that the title deed is not available with them because they have mortgaged this land with the bank, then how you would verify the rights and obligation assertion? Yes, anyone? Yes, through encumbrance certificate. Yes, anybody else? That could be also there, and the auditor can ask from the confirmation from the bankers that they are holding the original title deeds of immovable property as security. And these are the guys disclosure requirements, presentation and disclosure requirements of PPE under Schedule 3. So this in context of companies. Okay. So classification shall be given as land, buildings, plant and equipment, furniture and fixture, vehicles, office equipment, others. And other requirements are there. A reconciliation of gross and net carrying amount of each class of assets at the beginning and reporting period, showing addition, disposal, etc. So it means the whole schedule of PP items. Okay. If sums have been written off or there is a revaluation of asset, then such increase has to be shown. So these are requirements as contained in Schedule 3 to the Companies Act. And besides that, there is some information in respect of PPE items which is to be disclosed as additional regulatory information. So additional regulatory information, you would be asking, what is this additional regulatory information? Regulatory means which is required under law. Okay. So there are some disclosure requirements in respect of each item, and something has been mentioned in Schedule 3 to be disclosed as additional regulatory information. It means that statutory authority is asking for something more, something additional in respect of these items. Okay. So title deeds of immovable property not held in the name of the company. So except in the cases where the building uh, is on the lease or say is on rent, in all other cases title deeds of immovable properties are held in the name of the company. You have to state whether these have been held or not. If not, then information in this format is to be given. So this you have to remember. Whether the company has revalued its property, then it shall disclose whether revaluation is based on valuation by a registered valuer under the relevant company's registered valuers rules. And this information is to be given in respect of capital work in progress. For less than 1 year, capital work in progress projects which are less than 1 year, 1 to 2 years, 2 to 3 years, and more than 3 years. Okay. So this information is to be given. So next, we students, we come to intangible assets. Now tell me, what do we mean by intangible assets and which accounting standard deals with intangible assets? Yes. Yes, AS 26. Yes, Pranav, you are writing correctly. those assets that can't be physically seen or touched. That is one part. Does anyone remember the definition of intangible asset as per AS 26? Yes, guys. Does anyone remember the meaning and definition of intangible assets as per AS 26? So that's one part. Tejaswin, what you are writing? Bhavna, that is one part. The assets which can't be touched or seen, that don't have physical substance. So if I go by your definition, guys, then by can I touch the debtors? Can I touch the debtors? Can I sense the debtors? Yes. What is the complete definition of intangible assets as per AS 26? Yes, Apurva Das. Yes, you are right. It is a non-monetary asset. It is a non-monetary asset which can't be without any physical substance, which can't be touched, and it means that it doesn't have a physical substance, and it is used for use in production for the supply of goods or services, or for administrative purposes, or for rental to others. So this is the complete definition. So guys, uh, there is a one tip which I would like to give you. Like whenever there is a new term, whether it is in accounts, whether it is in auditing, or in any other damn subject, do not do not deviate from its meaning or definition. Always try to remember its basic meaning. All other things are going to flow from it. Say when you are appearing for the papers, when you are revising, then obviously in there is a holiday of one day. So it is not humanly possible for you to read each and every line again during this one day holiday period. So what you would be doing, you would be going through the whole module, looking at, making a quick glance. But while making such quick glances, you would refreshen up, you would remember the meaning and definition of all the important terms. Because say if you forget some things, some requirements, some issues which flow from that concept. So if you are remembering the definition, you are in a position to write it in your own words. Maybe you may not be able to do complete justice. You may not get 5 out of 5, but I think you would surely get at least 3 marks. Okay. So intangible asset is an identifiable, again identifiable, it should be identifiable non-monetary asset. It is a non-monetary asset without physical substance, held for use in the production or supply of goods or services, for rental to others, or for administrative purposes. Yes, you are giving correct examples of intangible assets, like Pallavi stating goodwill, copyright, patents, computer softwares, designs. So the companies, the entities, these are nowadays spending a lot of amount on these heads. Okay, so all of these are known as intangibles. Intangible means something which is not tangible, which can't be touched. Like say, I am getting certain tangible benefits from doing some work, and I may be getting some intangible benefits from doing some work which may not be directly measurable. So this is the sense how this. Hello. Yes, guys, you are able to hear me? Yes, am I audible, guys? Okay. So obviously, like in case of PPE items, we have to see that it should meet the twin criteria to be recognized as an asset. Similarly, in case of intangible assets, we have to see that enterprise, the entity, has control over the resource, control over that resource, which is to be classified as an asset, and there is an expectation that future economic benefits shall flow from it. Okay. No, no, Tejaswin, I didn't speak anything. I didn't speak anything during the period. I realized that my voice is lagging. Okay. And AS 26 intangible assets, it also states that internally generated goodwill should not be recognized as an asset. This you have studied in AS 26. And other important requirements of AS 26 which have been discussed in your module are, say, there may be some intangible asset which could be contained on a physical substance, like there is a software on some disk. So software carries substantial value, but the disk, although it is physical, it can be it is a tangible object, but it is of insignificant value. Okay, so this amount should in whole should go to intangibles. So tangible part is also considered as part of intangible. Okay, and and another aspect of it is, say if there is some intangible which is forming part of the tangible, and the tangible thing can't be run without that intangible. Say like there is a computer, so it can't be run without operating system. Okay, although there is a software in it. Okay, so the whole cost is capitalized as part of PPE. Like some, there is a machine which is which uses a software to produce designs. So obviously the cost of software is also capitalized as part of the machine. So these are some of the important points, fundamental points of AS26, which are given in your module for your refreshment. Yes, Bhavna, purchase goodwill has a monetary value. No, no, point is not monetary value. Obviously, intangible assets would have monetary value. The point is it should be a non-monetary asset. Okay. Then how, and same assertions which are in case of PPE are also there in case of intangible assets. So the students, intangibles by their very definition are without physical substance. Then how you are going to verify their existence assertion? Yes. How you are going to verify their existence assertion? So if something is not present in its physical substance, how you would verify its physical existence? How you are going to verify existence assertion of management? Yes. Anybody else? No, no, Pranav, you are writing, we will check the balance sheet balances of items. No, that balance is already there. So how you are going to verify the existence assertion? Yes, Ritika, Tejaswin, yes, you are writing correctly. So since an intangible asset is an identifiable non-monetary asset without physical substances, without physical substance, for establishing the existence of assets, auditor would verify whether such intangible asset is in active use for, say, production or supply of goods or services. Like, say, whether a software which is classified as intangible asset, whether it is being used for rendering services, whether such software has been used. So if such software where has been used to render services, then it means that it has existed, that it has existed during the relevant period. Otherwise, how services could have been provided? And like for verifying the existence of designs, the auditor can verify the production data. If such products for which designs were purchased are being produced and sold. So if production is there using those designs, so it means that those designs existed. So what I'm trying to tell you, twisting of things, just twisting of things. So always proceed these audit procedures questions logically with common sense and with confidence. Write relevant points. And again, I am repeating, see what is the requirement of the question. what the question is specifically asking from you, which particular assertion it is stating. So it is also quite possible that the name of assertion is not directly written in the paper. So it is giving you a hint by elaborating upon the meaning of the assertion. Okay, like it is not directly written how the auditor would verify completeness assertion in relation to intangible assets. It may be written that how auditor would verify that all intangible items which need to have been recorded have been recorded. So how you would verify that? Completeness assertion, intangible assets. Yes, students. Again, all those procedures which we have done in PPE, similar procedures, just write, change the word to intangible assets. Yes, correct. Correct, Tejaswin. See the intangible asset schedule, opening balance, closing balance, addition, deletion, all these things which you have just read in audit procedures relating to PPE, relevant to completeness assertion. What else? This is the one procedure. What else? Yes, anyone, guys, how you would verify completeness assertion of intangible assets? So like in case of PPE, we if there is addition, so we will see that under intangible assets, if there is addition, then we'll see whether the addition meets the requirements of AS26, whether this item has been correctly recorded as an intangible. So same thing in PPE, we had also seen that we would verify whether the same item recognizes the criteria mentioned in AS10. Okay. And ensure that no intangible assets arising from research should be recognized. So research expenditure as per AS26 is booked as an expenditure when it is incurred. Okay. So this is also one of the points of AS26. Again, for additions, whether proper approvals are there, whether internal control processes, internal control procedures have been followed for acquisition of intangible assets. Similarly, if there are deletions, then reasons for deletions and the management approvals in this regard, process of deletions, whether approvals have been obtained. Okay. And valuation. So how you are going to value, how you are going to verify valuation assertion of intangible assets, like in case of PPE. Similarly here, we know that value of intangible assets reduces, it diminishes due to use, due to time, due to passage of time. So it represents an expenditure, a cost to the entity, and it needs to be recognized as a cost as such in statement of profit and loss. So this is charged to statement of profit and loss to revenue account as amortization expenses. So the auditor would see that entity has charged amortization on all intangible assets. See how amortization has been charged. Okay. And impairment loss similar to PPE. Okay. Yes, Tambeshwari deletion means which has been removed. Like some item has fallen into disuse. It is no longer in its active use, or its its useful life, the life over which it was intended to give benefit, it is gone. Okay. And rights and obligations. So similar to PPE, the auditor would see, he would verify all the expenditures relating to the intangible assets. He would see the bills, contracts, which embark upon giving rights to the intangible asset. Yes, yes, Tejaswin. Okay. Required disclosures for intangible assets in accordance with the Schedule 3. This you have to remember. Now, classification shall be given as goodwill, brands, computer software, publishing titles, mining rights, copyrights, okay, and all the requirements which are similar to PPE. So these requirements are similar to PPE as it is. Okay. And as there was a requirement of capital work in progress, similarly, intangible assets under development, this chart is to be given similar to PPE, less than 1 year, 1 to 2 years, 2 to 3 years, more than 3 years. Okay, guys. So we are done with the important requirements of AS 10 and AS 26 and auditing procedures relating to PPE and intangible assets. So we shall be taking a short break of 5-7 minutes, and we'll be back after 5-7 minutes, guys. Yes, break for 5-7 minutes. Yes, welcome back, guys. So, students, now we shall be taking up another item on the asset sides of the balance sheet of the financial statements. That is loans and advances along with other current assets. So, residuary head other current assets. So loans and advances could be, guys, loans given to entities, loans and advances given to entities in the course of business, like for purchase of some capital asset, for purchase of some material for supplier, or it could be a simple loan given to another related party in consideration of interest. And other current assets is a residuary head, which means that assets um, which are to be converted into cash within a period of 12 months, other than those of the current assets which are specifically stated in the schedule 3 to the Companies Act. Like for example, like balance of ITC with GST authorities, or like say ITC refundable. Okay, so obviously, if some ITC is refundable to me, to the company, as a under the relevant provisions of GST laws, so where I would show it in the balance sheet, obviously under this head. So tell me, guys, now which audit procedures say you would apply to verify say ITC refundable of 25 lakhs, which is appearing in the financial statements of a company under the head other current assets. Yes, TDS, TCS. Just think from your own perspective. It is not written in your module. It is not there. We are just discussing generally. Yes, some ITC is refundable. Say ITC of X amount, say 25 lakhs, is refundable to a company, and the amount is appearing in the financial statements of the company as at year end, as on 31st March 24. Now, which audit procedures you would perform to verify this amount? Yes, that is one thing. But say the question in the exam is of 4 marks. You have to write some procedures in relation to it. How you will write? Yes. Yes, we shall analyze the sales and purchase of the company. That is one way of looking at the things, and see how the refundable amount has become due to the company. Obviously, definitely, we shall be verifying application filed with the GST authorities. Okay, if the same has been filed, and during the subsequent period also, we shall see that whether the amount which has been for which application has been filed with the GST authorities on the portal, whether the amount has come back to the company, as in its bank account, the amount which was claimed to be refunded. So it would provide evidence that the amount which is appearing in the balance sheet as on 31st March 24 is correct. Yes, guys. So just what I'm trying to say that you have to become, you have to gain knowledge of one critical aspect of of a required term. So it is very important for you to understand what this term or what this balance signify. So if you understand its meaning, then your work is done. You can make procedures out of it. Okay. And how you would verify loans and advances which are appearing in the balance sheet? Existence assertion. Yes. How you would verify that loans and advances given by the company which are outstanding on the asset sides? How you would verify existence assertion? So what we do to verify existence assertion? The same thing which we do in case of trade receivables, same thing we shall be doing in case of loans and advances. What is that thing? Yes, confirmations. Obtain confirmations from third parties. Yes. So that's right. Many of you are writing correctly. And what we shall do to verify completeness assertion? That completeness assertion, again the same thing, that all the loans and advances which needed to be included in loans and advances have been included as such. So it is not that some item of loan and advances has been classified somewhere else. Otherwise, it would give an incorrect picture. It would give an inappropriate picture. Okay. So obtain list of all advances and compare them with balances in the ledger. Verify loan agreements. And again, all other things flow out of this. Verify minutes of the board meeting. If some related party loans are there, verify whether these are properly authorized, proper resolutions have been passed. Okay. And in relation to balances with statutory authorities like GST, ITC, prepare a reasonability analysis with respect to purchases expenses. The same thing probably Tejaswin was trying to write. By applying the applicable rate to the purchases. Okay, so you can make an overall test that these were the total purchases and these were made at this rate, and now therefore there is an excess balance because sales are made at lower rate. Okay, so this kind of broad analysis you can do. So these are all relevant procedures. These are all relevant audit procedures. And other procedures which you are also writing, the auditor should obtain statutory returns filed with authorities like GST returns, or you can verify the GST portal to verify the balances. Okay, in electronic credit ledger. So you can verify the balance in electronic credit ledger with the value which is appearing in the financial statements. And you could analyze the reasons behind it if there is some difference. And then comes the aspect of valuation. So how you would value loans and advances? How would you test the valuation assertion of loans and advances? Yes. So same thing which we did with trade receivables. Now same thing we shall be doing with loans and advances. Yes. Yes, yes. Aging report of loans and advances. Whether the amount due is not recovered on time, whether a provision for doubtful debts is required to be made. Yes, checking loan agreement. This, yes, Vismitha, you are writing inspection. But what kind of inspection? Obviously, inspection of loan agreement. Probably you are trying to say. That's right. Okay. So guys, now it should have become clear to you that how you should approach this chapter. So you now by now you realize that how procedures are similar. Like we have seen that many procedures of PPE are similar to intangible assets. And some procedures of PPE are similar to inventories relating to existence assertion. Similarly, some procedures relating to loans and advances are similar to trade receivables. So therefore, that is why day before yesterday, I had insisted you to remember all the heads of Schedule 3 of the format of the balance sheet of which is provided in Schedule 3 to the Companies Act. And think what do these heads signify? Devote some time on those heads. Okay. Solving question in accounts is a different issue while writing about about a particular head of account is a different issue. Yes. Yes, guys. Are you getting what I'm trying to say? And if you remember these basic things, I can guarantee you that you can revise this chapter once you have devoted 4 or 5 days to this chapter. You can revise this chapter in just 1 hour, except Schedule 3 requirements. And for Schedule 3 requirements, you can revise it also in just 1 2 hours. And by making this quick revision, you are ensuring at least 15 to 20 marks in your paper. Yes, Tambeshwari, what you are trying to say? No. Yes. Yes, Tambeshwari, write clearly. And disclosure requirements of Schedule 3 pertaining to loans and advances. Now, loans and advances, long-term loan and advances shall be classified as capital advance, loan and advances to related parties, other loans and advances. And similar to debtors, similar to trade receivables, these are classified as secured, considered good, unsecured, considered good, and doubtful. Allowances for bad and doubtful loans and advances. And disclosure relating to loans and advances due by directors or other officers, or amounts due by firms in which director is partner or director is a member. So these are all specific legal requirements of disclosure. So by verifying these legal requirements, you are verifying the presentation and disclosure assertion of uh, which the management has claimed. Okay. Similarly, classification is there in respect of short-term loans and advances, loan and advances to related parties, others, and again these are classified on the same lines as long-term loans and advances. Clear, guys? And there is additional regulatory information disclosure where the loans and advances are granted to promoters, directors, or key managerial persons and related parties that are repayable on demand or without specifying any terms of period of repayment. Repayable on demand. Guys, what do you mean by repayable on demand? Yes, except Kiran Kumarji. He knows so he doesn't need to respond. Yes. Well, other guys, can you tell me what is the meaning of repayable on demand? Yes, give your response on BUS mail, guys. Yes, Sanya, yes, you are right. So, as the name suggests, repay the loan whenever company demands. It means no fixed repayment schedule is prescribed. These are at the whims and demands of the person who has lent the money. Okay. So, this disclosure in this format is to be given. How much loan is given to promoters, directors, related parties, key managerial persons, amount of loan outstanding, and percentage to the total loans. Okay. So, students, like this disclosure requirement, this has been asked not only once, but twice in your exams, I think. If I am not wrong, at least it has been asked once, maybe twice. Okay, just you have to write this para and this table, and this carries say 4 marks. Clear, guys? So let us do some MCQ, students. Are you ready for that? Some simple MCQs. Let us now refreshen up our knowledge of what we have studied in 2 days. Yes, Tambeshwari, tables come in exam. This is the question would ask you disclosure requirements. So now if in disclosure requirements table has to be given, then it has to be given in this format. So guys, take your time while answering the questions. These MCQs which we now are going to do, these are not difficult. These are simple to moderate. But the catch is that we make mistakes even in simple to moderate questions. So my request to all of you is, now we have um, done these concepts many times. So I don't want you to make mistakes while answering MCQs. Okay. Yes. Screen is visible to you guys. See the question number 1. Now CA Muskan is auditor of two concerns. One is this company Wellstar Homes, this entity, another is Wellstar Stores. The partners in both the firms are common. While auditing financial statement of Wellstar Homes, now read carefully. She is auditor of Wellstar Homes. She has noticed that few expenditure bills pertaining to Wellstar Stores have been entered in its books. In its books means in books of Wellstar Homes. Which assertion of Wellstar Homes is disproved in above situation? It means which management assertion fails in this situation? Answer carefully. Yes, few answers have come. What about others? Only 8-10 people have replied. What about others, guys? There are 50 of you watching it on Zoom. Yes, guys, I would like to wait and see what all of you have to answer. Still 15-20 responses have come. Yes, guys, send your responses quickly. Send your responses on BOS mail, guys, not on Zoom chat box. Now, students, we shall try to discuss this question. I have discussed this example at least twice or thrice. See, read the question carefully. Yes, Kasak, I am coming to you. CA Muskan is auditor of two concerns. Okay. Name of one concern is Wellstar Homes and another concern name is Wellstar Stores. The partners in both the firms are common. It means that both are related parties. The partners which are there in Wellstar Homes, the partners in the same partners are there in Wellstar Stores. Okay. So like in family businesses, you very well know that people make 2-3 firms to carry on their business. So she is the auditor of one such concern, that is Wellstar Homes. It is not written here that she is also auditing Wellstar Stores. She is auditor of Wellstar Homes. Okay. She has noticed that some bills which belong to what? Which belong to Wellstar Stores have been entered in the books of Wellstar Homes. Okay. So whether the expense bills, whether transactions in respect of these bills which have been reflected in financial statements of Wellstar Homes, whether these have taken place for Wellstar Homes. Give me the answer. Yes. Yes, students, I am asking from you something. Whether the bills which have been entered in books of Wellstar Homes, whether transactions for this have taken place as far as Wellstar Home is concerned. No. Okay. All of you are writing no. So then which assertion is violated? Which assertion is not proved? The question is asking from you to state which assertion is disproved, meaning which assertion is not proved. Yes. Dilip occurrence. Yes. Vismitha occurrence. Manoj Makwana occurrence. Many of you have written correctly. See, the definition of occurrence is that transactions have in fact taken place and these pertain to the entity. Now, do these transactions, expenditure bills, do these transactions pertain to Wellstar Homes? No. Therefore, occurrence assertion is violated. Occurrence assertion is not proved. Yes. Is this thing clear to you guys? And somebody is writing classification. What is the how does classification come in picture? The transaction in fact has not taken place. The bills do not belong to the entity. So occurrence is not proved. Rest all things are secondary. Occurrence is not proved. The transaction in fact didn't occur for the Wellstar Homes. Yes, what was the rocket science in it? The same example, students, day before yesterday, I had given you by the name of Prime Industries. Probably then Tambeshuri was asking, what is the, please explain this example. Now I have put a question the same way. And somebody is writing accuracy. How accuracy? Accuracy means the amount recorded is correct. What is written in bill. Now here the bill is not at the first place belonging to the company, belonging to the entity. And how it could be completeness? Whether it was required to be recorded. It has not taken place. Understand it, understand the essence of occurrence. Yes, Gurminder, you have also written correctly. Occurrence. Yes, is this MCQ clear to you guys? Yes, Bhavna, occurrence means whether it has occurred or not. For account balances, it is called existence. For transactions, it is called occurrence. Meaning of both is same. Like for sales transaction, we would say whether sales have occurred or not. And for sales, when obviously sales are made to trade debtors. For trade debtors, we would say whether the trade debtors existed as on that date or not. So the underlying meaning of both is same, but nomenclature is different. In case of transactions, in case of profit and loss heads, we call it as occurrence, and in case of uh, balance sheet caption heads, we call it as existence. No, Bhavna, but you are saying in this question, bill occur but transfer in wrong place. But bill has occurred for Wellstar stores. Muskan is auditor of Wellstar Homes. She is not bothered about the occurrence of Wellstar stores. Whose books of accounts she is auditing? Tell me. Is she auditor of Wellstar Homes or Wellstar stores? What is given in the question? Yes, Bhavna, is it clear to you? Yes, Bhavna, come on. Is the point clear to you? Okay, that's great, Bhavna. See question number 2. Pretty simple. A company has disclosed inventories relating to 50 CR in its financial statements in requirements of Schedule 3. The inventories have been classified into raw material, work in progress, finished goods, stock in trade. Mode of valuation is also stated as per requirements of Schedule 3. Which management assertion is being verified by auditor by delving into such information. Delving means by going into. Yes, I want answers from all of you guys. Around 4950 are still there on the platform. So guys, now let all of you answer. Then I will tell you how you guys are making foolish mistakes just in damn simple questions. Yes, just 15, around 15 responses. Yes, students, I want all of you to respond. Guys, do respond. Maxim, what would happen? You would give wrong answer. It's okay. Heavens won't fall if you give wrong answer. It is part of your learning exercise. Yes, guys, we'll wait for other people also. Take your time. Take your time, guys. Read the information again. Read the information again. And then we will discuss where guys we are lacking. It is due to this precise reason that I had devoted substantial time of this chapter to assertions, because I know where that you guys make mistakes while understanding the meaning of assertions. Yes. So guys, tell me, this information is given to you that a company is has disclosed inventories in accordance with the requirement of Schedule 3. The inventories have been classified again in accordance with the requirement of Schedule 3, raw material, work in process. Mode of evaluation is also stated in accordance with the requirement of Schedule 3. Which assertion is being verified? It is clear on the face of it that it is presentation and disclosure assertion. How somebody is writing completeness, how somebody is writing existence. Now, how you can say, guys, that he is verifying existence? Has he attended physical inventory count? Is there something written here? He is just looking at the classification which is required in accordance with the requirements of Schedule 3. Now let us see what is written in Schedule 3 in relation to inventories. We had discussed it earlier. What are the disclosure requirements relating to inventories? This is inventories shall be classified as raw material, work in process, finished goods, stock in trade. Mode of evaluation shall be stated. Now, this information is required to be disclosed in accordance with Schedule 3. How you are writing existence? Yes, Paranjali, is it clear to you? And how you are stating valuation and allocation? Kasak and all others who have written valuation, Vismita, Tambeshwari, has he gone into is it written somewhere in the question that that he has checked the elements of cost, that which items go to form part of the raw material cost? Is some information is given here? Only mode of valuation is stated, that is disclosure requirement. So you have lost valuable 2 marks by your foolishness. So the questions in exams, many questions in exams are usually of this level. These are not very tough. These are just simple to moderate with sprinkling of little bit of difficult questions, one, two here or there. But as a whole, the paper is moderate. But the point is that we make mistakes while answering simple questions, the answer of which is apparent, like this. Yes, question number 3. See, you have seen the question. Now 4 options are there. Yes, only one response has come from Sanya. Yes, guys. No, it is a simple issue of valuation. The answer is C. That's how, Kasak, you are writing existence, where it is written that the borrower, that the auditor is asking for a confirmation from bank, and where rights and obligations are concerned. The question is of valuation, that loan in foreign currency is converted into rupees by applying proper exchange rate, closing exchange rate. Yes, fourth. Now this is damn easy. Yes, fourth question, number fourth. Yes, yes, Karsak. Liability is also an account balance. Liabilities are also account balances, and assets are also account balances. Yes, question number fourth. Yes, this you are writing correctly. Dilip, Tejaswin, Sanya. Yes, all of you have written it correctly. The answer is existence. Fixed deposits. It means these are appearing as an account balance in the financial statements of the company. Vismita, how you are writing accuracy? He is physically seeing fixed deposit receipts. So what is auditor's purpose of behind seeing the fixed deposit receipts? His purpose is that these deposits do exist. And related to it is, if I change the question, like by seeing the fixed deposit, which audit procedures the auditor is performing? Say four options are given to you: inspection, observation, inquiry, and recalculation. What should be the answer if I frame the question in this way? If I change the question in this way, name the correct audit procedure. Yes. Bhavna, Sanya, Balchandra, you have written correctly. And Vismita, it is not observation. Probably you have not seen previous lectures of chapter 4. So there is a difference between inspection and observation. Inspection means seeing some document, examining some document or some asset. So what is a fixed deposit? Fixed deposit is a piece of paper. So the auditor is inspecting. Observing means doing, seeing somebody perform the things. Observation is used in that context. Inspection means examination of some document or asset. Yes, now at least I can get comfort that most of you have written this question, this inspection part correctly. So I am glad that at least you understand the meaning of inspection. Now question number 5, yes, this is also pretty simple. We have done it many times. Yes, answer is C. That is valuation. Aging report. He wants to see whether there are old debtors for which provision is required to be made or not. So Pranav, how you are writing A? Aging schedule. By going through the aging schedule, the auditor doesn't get any sort of comfort that this debtor in fact exists. This comfort he gets when he confirms the balance from the trade receivable by sending a confirmation letter, by sending a confirmation request. So answer is C, valuation. Yes, Anjali, Bhaskar, you have written correctly. Pallavi, I hope you have understood it. It is not existence. We have done at least 5-6 times during during our study of chapter 4 and this chapter also. Now see this. Very simple. Yes. Answer is D. Cost of replacing parts which were damaged after machinery ran for 6 months. This is in nature of repairs. And Dilip, how you are writing C? Professional fees of 25,000 paid to engineer appointed by machinery supplier for bringing machinery to working condition. The amount which is paid to start the machine, to bring the machine into working condition, it has still not started. It is a capital expenditure. Yes, Dilip, is it clear to you? Yes. This one, if you know, we have still not touched upon it. If you know it, then it is bonus. So useful life of assets to arrive at charge of depreciation in books of accounts of companies are. Yes, anyone, guys? These are described in Schedule to the Companies Act. No, these are not in Schedule 3. Useful life of assets are described in Schedule 2. This we'll discuss when we shall be discussing uh, various items relating to profit and loss. Okay. No, all of you are wrong except one or two. Apurva Das, you have written correctly. Sahu, you have written correctly. Okay. Yes. मनीष अनम्यूट कर दो, किसी क्वेरी है तो मनीष. ये स्टूडेंट्स, कोई क्वेरी है आपकी? एनी क्वेरी? So guys, another important thing is that there is no session on 12th due to my non-availability. So the next class will be on 14th. That is on next Thursday. There is no session on Tuesday. Yes, guys, any other query? So we are going to close otherwise. Okay, yes, Hardik.
Sir, good evening, sir.
Yes, Hardik.
Sir, in case of our PPE example which you gave, sir, you said that after custom duties, if any of the GST is added, then it will be included only if it is only if ITC is not available to the company. Sir, after customs duty, the GST is added on the value of the asset or after the customs value?
It is after customs value.
After customs value.
Yes, yes.
Sir, one small doubt. Sir, if a company, if an auditor wants to assess the company's bank overdraft assertion and
Bank overdraft balance. Yes.
yes, sir, and to verify it, only what kind of external confirmations he can go for?
He would ask from bankers to confirm the balance.
And no, sir, like any physical document, like a passbook or any other document
Yes,
which
yes. Bank statement.
bank statement, passbook, or
Yes, yes. Loan statement. So this point, bank overdraft, this is covered in short-term borrowings, which we shall be discussing when we shall come to liabilities portion. Okay.
okay, okay, sir. Thank you, sir.
Okay. Okay, guys. So this is over for today. Have a good time. Thank you. Thank you, all of you. Yes, yes. Session over.